Welcome back, traders and investors. We're with Harlan Pyan of All About Trends here. He is all about trends. Harlan, how you doing this morning?
Hey guys, I'm doing fine. Spring has sprung along with the market.
Yeah, correct. And you've been, I have to admit, you've been a little bit of a trend follower here. S&P's hit a new all-time high during the pre-market session, kind of falling back a little bit here. Getting a little nervous at this level, or maybe taking some profits on some
Nah,
long. No, you're not nervous.
well, when I look at the S&P 500, it's real simple. It's 1840, that support. Right now, okay, it's falling back a little bit. Well, that's because they're retesting the highs here. So, you just had a nice 3 to 4 day run. So, a little bit of catch your breath wouldn't be out of line.
I've been thinking about you as all these momos have been pulling back, and you always like to buy the pullbacks on the stocks that were moving. Have you been picking up or scooping any of these things up on these pullbacks there, Highland?
A little bit here, a little bit there. There's some really nice names that are starting to wake up. Even the names that got killed are starting to wake up. So, the NASQUAC, add that to your spoof list or spooze list. We'll call it the NASQUAC. That thing came down to 61.8 Fibonacci retracement, and bam, off to the races. So, in growth land, there's some really good stuff, and there's some stuff that's been beaten up that needs to build a whole new base. But
Okay.
let's go ahead.
Oh, I was just gonna say. I mean, we talked with Nick Shaheen yesterday here about the Google, and he was just. I mean, he likes to play the stock because it's volatile and stuff, but he is just. The split's coming up. Do you have any take on that, or are you trying to participate ahead of the split? Because it's going to be, what is it going to be? Instead of one $1,100 illiquid stock, it's going to be two illiquid $550 stocks.
Well, Google's a market leader. It's 8% of the Nasdaq, so you really got to pay attention to it because when it moves, the market tends to move. You know, I'm looking at it 1100 right here, pre-split. That support. We came down, you hit a support zone, and it bounced. Maybe it runs up to the 50-day moving average of 1176 and backs and fills for a little bit. So I don't really have anything bad to say about it. I don't really have anything good to say about it. Right now, it's below the 50-day. It needs to build some sort of a pattern that we can work off of. At
Uh,
least that's for me.
Okay, what about? I mean, Tesla had a nice pullback here, a little bit of negative ink in Barron's, and also 60 minutes. Had to spike low to 203, but then kind of protected that 210 level. Breaking out today, I was hoping to get a shot when it went through that 216.75 area. Were you able to pick any of this up onto the decline?
I already own it. I own it a little bit higher. I got head faked on it right around the 236 level. It
Oh,
hit
when it
the
was making the
230.
base. Yeah.
Yep. It was pulling back. It cracked over the pullback off highs line. And then it head faked. But here it is. Where did it sell off to? 38.2 Fibonacci retracement. You have a trend line there off of the January lows. It's got a huge pullback off highs here. So I got nothing bad to say about it.
Where would you let that 236 long go? I mean, you let it. I mean, it went down to 203 or something. Where do you just have a small position in it, or what? What would have been your stop on that
Well,
trade?
we use trade size risk management. And one of the things we do is we try to take no more than 5% of a portfolio in any one issue. Reason being is because let's say a stock goes down 20%. Okay, on its own, it doesn't look all that fun, and it isn't. But when you throw it in the context of managing an overall portfolio,
Right.
you know what your impact is? 1%. So why sweat out the gyrations? And, like you've been talking about these HFTs, they tend to skew things around quite a bit. So we need to allow for that volatility that those guys create, so you spread out your risk a little bit more. And in doing so, you manage your volatility a lot easier. But plus, you got support here. I got this 200, 195. Those are all really good support. So if a stock is coming down to support, why should I stop out of a stock that's coming, down to support in tandem with the NASDAQ? I'm not going to stop out of it. The damage is already done. It's a stock that's in a clearly defined uptrend after the December lows, and it's a market leader.
Yeah, so you still like the company. It's just a matter of now, would you add to that position if it pulled back here? Do you add to the losers sometimes, or how do you approach
Well,
that?
Everybody says, oh, never, average down or add to it. Forget about that. Look at the overall chart pattern. What's the overall pattern? Could you have added to it down in here? Sure. What is it? 1, 2, 3, 4 days ago, those lows, that was the face of fear lows in the market. Look at everything on that day. That was the day that the NASDAQ hit its 61.8 Fibonacci retracement. It hit trend channel support. It was deeply oversold. There was a lot of fear in the market. That was your face of fear trade. Go look at a lot of stocks out there. That was the day.
And what kind of target would you have? I mean, you looking for this thing to go back to new highs, or you just kind of roll your target with the market?
I kind of roll it with the market. I kind of like that term. So because I don't like to set targets, I don't like to become mentally attached to a target, and then it gets close, and because I had to get that extra dollar, the stock rolls over and it ends up costing me 4 or 5 points.
Okay,
all because I had to get that extra buck.
How about Twitter?
I haven't looked at it in a long time. What's it been doing? It's been in the gutter, though, hasn't it?
Hasn't. Just doesn't participate. I mean, we were talking about a lot of these momos here rallying back yesterday. Priceline bounced $50. Google was bouncing. Facebook was bouncing. I look at Twitter, it's just sitting here doing nothing again. It's having a tough go to get back.
It's ugly. It is. It's really ugly. Do you see anything there? I don't. I see no pattern there that I can work with.
The only thing about this is, I did a little story on it. I mean, it did come back to the IPO price, which I think is interesting. Mm-hmm. And it did get through there, went to 43.31. And I was looking for, that perhaps to be the low, getting some, consolidation. That's exactly what you have. And now you have an interesting level on the upside. Just call it the whole 47.50 area. 3 highs between 47.34 and 47.75. I think this is going to squeeze the shorts a little bit and maybe make a run back up to that old support, new resistance $50 level.
Yeah, it could. It could. You look at those lows from 4 days ago. There you go. See, 4 days ago was the day. In the face of fear, nobody wanted nothing. That was the trade. So draw a line across those lows in the 43 range. As long as it doesn't go below there,
yep.
For a short-term trader, you're fine. You have to have a reference point, especially, in this stock, because there's really not, in a daily chart, a lot to work off of. So, what if it comes down, puts a double bottom in, and then breaks to the upside of those highs off of, let's call it March 17th.
Okay.
Just line up your tops, nice downtrend, nice pullback off highs, puts in a double bottom, launches to the upside. There's your trade.
Okay.
So it's like that stabilization that we look for.
Okay.
We're always looking for stabilization.
Stabilization. Okay, that's the name of the game. J. Dot is asking, Bloomberg ran a story on Tuesday on Obamacare, and then he says Obamacare repeal stocks. And any thoughts on that? I mean, I didn't see the Bloomberg story, and I don't know. They hit their first objective with the Obamacare as far as the enrollment goes. So I've asked J. Dot for some. I mean, I don't think this thing's getting repealed. I know this is like really changing subjects here, but I'm not sure what that Bloomberg article said. Maybe we're stepping in some doo-doo here trying to talk about this, but any stocks that you have on in the healthcare sector you're looking at?
No, not really. I'm not seeing much of anything there, but I haven't been focused on that. I've been focusing on names that are in clearly defined uptrends that have been pulling back off highs and are breaking to the upside.
Do you short stocks?
No. I do. There's a time and a place for it. This thing was done and over with so fast to the downside that, sure, you get a trade a trade that triggers, and the next thing you know, guess what? You don't really get any follow through except for a day or two, and that was it. So, aside from a lot of the growth names into the end of the quarter that just went straight down, of course, those are, right now that the quarter's over, a lot of those stocks are screaming. So, so I just, with the market looking the way it is, I'm just not seeing any short sell patterns that I can work with.
Okay. Go ahead, Dennis.
Morganomics from the chat has got a good one here, and it might be one that's up kind of your style there, Harlan. FEYE. Check this one out because it's put 3 lows here. It's made that nice base that you always talk about in the $60 area. Got down to 60 and a quarter on the 27th. The next day was right around the same area, 60 and a quarter. And then just a couple days ago, down to 60.80. So this whole $60 area, nice support on a stock that had a clearly defined uptrend, has pulled back significantly. Is this one that you kind of like?
I've been watching it for quite a bit. What I don't like about it is from a daily, it broke the 50-day moving average. As long as it was, off of the December lows, nice uptrend, backing and filling along the way, higher, stair-stepping higher, and then, it did a nice pullback off highs. Then just into the end of the quarter, boom, they just dropped it right below the 50-day. So now, this thing could rally up to the 50-day, and it could have some issues. It really
Where's the 50-day?
needs to build. I got it at 73.47.
Okay.
So, if it stabilizes here, yeah, it could bounce, but there's really not a great looking chart to work off of. For me personally, to each their own. From a day trader, it's been sitting here between 60 and 64 and change. So that's stabilization. It is oversold. That is a prior minor support level going back to the beginning of the year. So, you could get a bounce. So, but it's just not a pattern for me at this moment in time that I'd be looking at. But that's me.
Yeah, Morgan I was pointing out insiders, once the lockup period, they took their profits on it and, knocked it down pretty good. So you got to be a little bit wary with, the insiders. But basically, you've had you've been at a 40-point drop here, a little bit less from the $97 level. I mean, to me, if this $60 level, can hold, maybe you get a, 17, 18-point rally back to this $80 level, and then Morganomics, if it does get back up there, you have a double top just below 81. You might want to regroup the troop there if it can gets back to that level.
Colt's Luck here in the chat also has an interesting one, SPLK, looking at Splunk. And we talked about this a few days ago, how it could not get through 90. I guess it was a couple of weeks ago. 4 tops right under 90. Interesting, falls hard all the way to another big hole, number 70. Kind of puts in 4 bottoms, so kind of the opposite of what it did at 90. Bottoming 71, 71, 10, 70, 44, and then 71 again yesterday. And then lifted towards the end of the day and closed fairly strong. What do you think of this one there, Harlan?
Well, see, that's the thing. When this issue dropped below the 50-day, it did so in don't blink form. It was just fast and furious. And, if you try getting out of a stock that's in a fast market, you typically get filled
the low
at the lows. Yeah. So, so you tend to go, okay, I know if I sell it here as it broke its trend, I'm going to get the worst fill possible. But you can see this name, a lot of the other names that look like this. Do you notice how it did nothing into the end of the quarter? It's almost as if fund managers wanted nothing to do for their window dressing periods. But then after we got through that, hey, it's a brand new quarter. We don't have to show this on our quarterly report. Every one of these names, Workday, Splunk, numerous names that look like this, they all took off. So, right now you got to call $70. The $70 range, a support zone, because look at back in December. That's a zone where it just kind of pulled back to support.
Right.
But, we've seen V bottoms before. And who knows, maybe it puts a V bottom in and just takes off and never looks back. We've seen that a lot over the last year. I'm not going to go out that far on a limb, except to say, you know what, dead cat bounce, use the strength. If you own it, you use the strength to get out of it. Who's not to say it's not going to build a whole new base down here? Think the bottom of a cup, like the whole month of December.
Okay, one last stock here, and then we'll let you go. Maybe you can hop in the chat room, answer a few more questions. LACO, Lakes Entertainment Corporation. That's a lower price stock. Any take on this one, Harlan?
Uh, well, very thin. 43,000 shares traded
Wow.
yesterday.
Wow.
So that's one of those trade by appointment names.
Yep.
Um, you know, it's pulling back off its highs, off of that 5.5 level. Came down, doesn't like to go below 40. Let's just call it 490-ish.
Yep.
Doesn't like to go below 490-ish. Line up your tops. I got nothing bad to say about it except it's thin. You line up your lows off of the January lows. You got a nice, clearly defined uptrend above the 50-day. Here's a name that's pulling back off its highs in a clearly defined uptrend. It's
So you
a
like
nice
this one a little better? Yeah.
Yeah, I
sure.
do. I just don't like that it's very thin. Try getting out with size once, you know. Now, in addition to this one, let's just look at another one, one of our blasts from the past, fuel cell.
Oh yeah. What do you think of fuel cell?
FCEL.
Yeah.
Look similar?
Yep.
Sure enough, there it is. You know, broke out, let's call it $2. Went on a nosebleed run up, and here it's been pulling back off highs. It's been trying to stabilize at 2.25. You know, you got major support at $2. You know, this is one that it's pulling back off its highs. You wait for the break to the upside, let the dust settle from the initial breakout intraday, you know, and then you pick it off and you set a stop at and you break below $2 because that's a major support.
Okay, thanks, Harlan. Harlan Pyan
You
from
betcha.
All About Trends. Hop in the chat room. I see we still got a few more questions hopping in. So thank you very much, and we'll talk to you next week.
All right, guys. Take care. See you later.
Thanks, Harlan.